People are freaking out. Okay? Any company that's spending a lot of money on CapEx, for example, big tech is getting absolutely destroyed. Microsoft is down 30%. 30% from all-time highs. Just about every single software stock that you've ever heard of is tanking as well. That does include Palantir, by the way. No one can escape the SaaS apocalypse. And Michael Burry's making absolute bank shorting Palantir. We gotta simplify all this nonsense, and it comes down to one thing. Money. Haha. That sounds really obvious, real funny. Okay? Today we're gonna be talking about the primary reason that the stock market is so damn nervous, especially when it comes to anything in God's green earth related to AI spending, whether you're one of these big CapEx plays, Microsoft, Meta, Amazon, Google, who are gonna spend over $600 billion combined, just those four companies, on NVIDIA chips, more or less. And of course, we can't leave out companies like OpenAI, because they're causing a lot of worries in the AI space. The two primary reasons. One, the amount of money that these big companies, namely these guys, are spending on CapEx is not going to be worth the return they get on that investment. They're not going to be able to sell their Gemini subscriptions, not the Sora meme generator subscriptions, and maybe not even their new erotic content, their porn bots, I guess. God damn. But whether you believe that or not, that is incredibly hard to predict, so we're going to put that one on the back burner for now. Obviously, that's going to continue to be a worry going forward, especially as these companies continue to raise more and more money to fund their AI infrastructure build out. But the one we can evaluate right now, because there's a whole bunch of new data coming out on it, is this one. There's not enough money to even fund it in the first place. Forget about the return on investment you're going to get when you do release those AI products. You're not even going to have the investor confidence to continue to raise money in the first place. This one is scaring the living shit out of investors right now. Where's OpenAI gonna get all their money? There's no way they can continue to raise at higher and higher valuations. Google's reducing their cash flow by 95%. Investors are getting screwed. None of the profits are being returned by shareholders. Let's calm down for just a second. Okay? And I always got to hit you with the quick disclaimer before we get into this. I'm an engineer. I'm biased towards investing in innovation, investing in technology. And to do that effectively, we need to understand the technology, the finance, and how those things intermingle together, right? That sounded weird. So we're not going to go through all the boring, super nerdy technical stuff. No, we're going to look at the data that actually matters, that applies to you, and maybe you can have a conversation with your friends about it, I guess. It's not going to be highly edited, but this information will help you understand the dynamic and the things to look for in these companies, your big tech, your AI, your software, going forward. So with that out of the way, let's talk money. This right here is BS. I'm going to prove it to you right now. We'll break this up into two sections. The big guys, so big tech, why do they have to raise money? And then the little guys, your OpenAIs, your Anthropic. I think it might be a little more obvious why OpenAI has to raise money, but nonetheless, let's talk about the big guys. Let's talk about Google. Remember, the fear that we're trying to address is that people are deathly afraid of companies raising money. If they continue to raise all this money and AI doesn't pan out how everybody expects, then they're pretty screwed. Right? But at the end of the day, why would investors ever be worried about a company like Alphabet investing all this money? Over the last year, they had just about $165 billion in operating cash flow. In other words, the cash that they had after paying all their usual business expenses. They spent $91.4 billion on CapEx last year. They expect this amount to double. We're talking about $180 billion versus their cash flow last year of about $150 billion. So people are nervous. This CapEx number is growing really fast. Makes sense. We get it. So you know what Google says? Hey, investors are really nervous about how our cash is looking next year. Let's just go to the debt market. Oh, you couldn't go to the debt market? Who would buy your stupid, boring bonds, Google? Well, I'll tell you right now, a lot of people would. Specifically, insurance companies, pension funds. Google issued just last week a 100-year bond. Yes, you heard that correctly. They raised $1 billion, but there was 10 times that amount in demand. You know what that means? There's plenty of money that can be raised by these big guys if they truly want to. Now, your obvious question would probably be, why would anybody in the world want a 100-year bond? Google has a lot of promise right now. It's one of the top technology stocks to exist on the entire planet, but can we really trust that they're going to maintain this technological status a century from now? ChatGPT was just coming out 3 years ago. Look at how much has changed since then. We're talking about a massive period of time. So say you run an insurance company. I'm not here to teach you all about the business model of an insurance company, but I'm going to do it anyways in 1 minute. So you have an insurance company. Let's call it J.Co. They're dishing out life insurance policies to you. This is you. You need a life insurance policy. You want to be covered just in case. You never know. You're going to pay the insurance company a little bit of money each month in the form of a premium. You're going to do that for years and years on end, God willing. When you pass, your family is going to get paid out this policy amount. These guys have some really smart people that do some really cool math to make sure, or at least come close to profiting based on predicting how long you're going to live, etc. So these premiums will most likely cover this cost. But even if it doesn't, they want a place to park this cash that you're paying them every single month to make a little bit of extra money just in case their predictions don't pan out perfectly. What better place to park this premium cash than in a Google bond for 100 years that pays out roughly 6.21%? Now that may not sound like a lot, but when we're talking about millions of people needing life insurance and them all paying $10 a month or whatever it is, we're talking about billions of dollars. 6.21% makes for some pretty good income for the insurance company. Life insurance policies can last, 50 plus years? So if you're guaranteed 6.21% for 100 years from one of the best technology companies to ever exist, you're going to take that. This company has the same credit rating as the US government. Yes. That's right. There's as much faith in Google paying back its debts that there is in the United States. So I think that puts into perspective, one, the kind of world that we live in, I guess, and two, that it's a pretty safe investment for this insurance company, especially over the long term. Now you tell me, should there be any worry about a company like Google raising money? I believe just based on this one example, they went out to get $1 billion raised. There was like $9 billion of demand. Let's just say Google could raise as much money as they damn want. Now that 100-year bond was just in the Great Britain pound market. They're raising another $20 billion in the US market, whether that be through life insurance companies like we just talked about, pension funds, 401ks, whoever else wants that attractive coupon every single month from one of the most trusted and technologically advanced companies that the world has today. In this $20 billion round, they had $100 billion of demand. So if you hear people talking about how there's not enough money to be raised to fund this build out, please, we're just looking at one company, one small example. Please, come on now. There is virtually infinite money to be raised by these bigger companies like Google. Some smart guy said that I think the fact that a 100-year bond comes out, you can't get much more frothy than that. If you're looking for a signal of a top, even if it's a brilliantly executed deal, it does look a bit like a signal of a top. Absolutely. This could 100% be right. This could be the top of the debt raising storm that we're seeing right now. But I genuinely think the opposite. I mean, the fact that you're able to come out with a 100-year bond and get anybody to buy it shows the faith and confidence of these massive multi-billion-dollar entities in the return on investment of AI eventually paying off. Because at the end of the day, it doesn't look like this life insurance company is putting any faith into AI per se. They just want to get this 6.21% payout. But keep in mind, if Google were to eventually not be able to pay back this debt, then this life insurance company gets screwed, right? They don't get paid back their principal. They put in $100 million. Say goodbye to that. So obviously, they believe in AI eventually paying off. So that all makes sense for a big, trustworthy, cash-generating machine like Google, right? It's easy to put your trust in Google right now. What about a company like OpenAI? A company that's generating like 20, maybe $30 billion in revenue and spending much more than that with something like over $1 trillion in spending commitments, this gets a little more scary. Now let's simplify why I don't think this is going to be a problem either. Just over the past month, OpenAI is in talks to raise as much as $100 billion. Who is going to give this company $100 billion? Do we really have that much faith that OpenAI is going to be printing hundreds of billions of dollars in revenue by 2030? Because that's what they're banking on. Guess what? It doesn't really matter what you think. Newsflash, the only thing that matters is Microsoft, Nvidia, and Middle Eastern sovereign wealth funds believe that it's going to happen. And even if they don't believe it's going to happen, trust me, it's in their best interest to make sure that it does happen. OpenAI needs money. This money right here, wow, look at it, yay, money, all burning. They're burning the hell out of money right now. So what they're gonna do, they're gonna go to Nvidia, to Microsoft, to Amazon, say, hey guys, please give me some money. We need to keep buying GPUs to make our chatbots the best of the best. Our memes and erotica is going to be the best in the business. Please give me some money. I need it. To be frank, Nvidia, Microsoft, and Amazon, well, especially Nvidia and Microsoft. Microsoft's directly invested in OpenAI and putting all their eggs in that basket, essentially. Nvidia sells OpenAI the product that they use to generate intelligence and build their service, ChatGPT and others. So of course, they're going to fork over money. It doesn't matter what OpenAI's valuation is. They're going to do it because they're stuck. They have to do it. They're going to hand over this $100 billion in some form or another. And yes, we did get a scare from Nvidia. They said, hey, OpenAI isn't managing their situation very well. Maybe we're going to pull out of that massive deal that we made with them. Because it was, it was just on paper at the end of the day. We said we were going to give them up to $100 billion. That's not going to happen. We're going to give them like $30 billion this next funding round. Then maybe like another $30 billion down the road. The point is they're still giving them a ton of money. Obviously, yes, they hope that OpenAI's valuation continues to soar, and it has. But even if it doesn't, this money right here is going to turn around and go straight into Nvidia's pockets. I mean, they're literally going to turn around and give all of that $100 billion back in the form of buying Nvidia compute, because they need to make their models better, right? And Microsoft's happy because OpenAI stock go up, their investment go up. Amazon, I guess they're just getting taken along for the ride. I mean, they also need AI to succeed if they're going to justify their $200 billion in CapEx. So yeah, this is just a nicer, more complete drawing that kind of shows the circular spending. This has been an ongoing theme for months now, right? This isn't some new novel concept. But the point is, this is going to continue happening. Now, I will say there are plenty of risks. We have a company like Oracle, their credit default swaps, some fancy financial term. We don't have to get into it in detail, but simply put, the higher this goes right here, that means the more expensive it is to ensure that Oracle doesn't go bust. Even more simply, this line go up, investors are very, very worried that Oracle's going to go bankrupt. It's literally at the highest level since 2008, the great financial crisis. Not the best place to be. Now, are these fears overhyped? I would argue yes. We may be seeing cracks in private credit, but at the end of the day, at least right now, there is so much money available for these companies to continue going out and accessing that, in my opinion, this worry is severely overblown. Now, obviously, I could be wrong. Like I said, I'm biased. But Nvidia is going to continue printing money. DeepSeek 4.0 or not, these companies are going to continue to buy chips because that's the nature of this AI investment cycle that we're in. Buy as many chips as you possibly can, worry about it later. The show me the money phase from these companies is coming. Obviously, this will be the focus in the coming years. Is your return worth the $600 billion that you spent in CapEx in 2026? Is this number going to continue to go up? Probably. That's what the companies are saying. And that means Nvidia money go up. And if Nvidia money goes up, then OpenAI is absolutely bailed out no matter what. Same with CoreWeave. That also means Amazon, Microsoft, Google have to follow suit because they can't afford to have AI fail. So yeah, in my opinion, there's a whole bunch of people calling that there's a lack of money out there to be raised available for these companies, both private like OpenAI and public like Google, because their cash flow is going to zero. Let's be honest, that doesn't really matter right now. They have the credit power of the United States. That's absurd. But what do I know? If you managed to make it this far in the video, please Let me know what you think. I'd be interested to hear your thoughts and subscribe. Yeah, that'd be cool. Oh, and another thing, while we're on the topic of people saying that there's no money out there, a lot of those people may be Wall Street. They're trying to scare you out of positions before the next leg higher. After all, they have a lot of data that you don't. Till now. See what I did there? This right here is Markets Predictor. It's a platform I've been working on to give you an edge, okay? You're not going to be behind the street anymore. They're not going to be able to take advantage of you because all the data is going to be right in front of you. $60 billion, that's the amount of trading profits that Wall Street made over the last 12 months. Yet 80% of everyday investors lose money trying to outperform the market. I'm evening the playing field for you. You can simply go over to our chatbot Jimmy right here and ask him anything. Hey, Nvidia earnings are coming up. I think they are going to moon. But investors might be anticipating that run up. How can I take advantage of this? Does Nvidia usually perform well before earnings? Our buddy Jimmy right here is going to print you out a strategy that you can run to test your hypothesis. Whatever that is, I don't care how weird it is. It should be about the stock market. You can edit the different parameters if you want to test further back than 2024, for example. We can open this in the strategy lab and adjust the various parameters. I want to buy 30 days before earnings. We'll just go with the default exit strategy. That's nice and convenient. You know what? Nah, I want to go all the way back to 2015. I want a decade worth of data. 100% of our money going in 30 days before Nvidia prints earnings. And boom, we absolutely annihilated the market. We're the GOAT. We're the GOAT trader. All this data is available to you right now. And yes, it used to be you need to know all these fancy mathematics, statistics, financial lingo. Right now it's here for the taking. You just gotta use it. I promise it's simple. And if it's not, let me know, okay? If nothing's coming to your mind, nothing that you immediately want to test, check out the signals that are firing right now. You can see the kind of simple analytics that we're looking at, what usually happens after that signal, what happens after a volume drop on Avgo, on Broadcom. It's pretty good. And my secret strategy that's been absolutely printing, don't tell anybody, the extreme high breakout, we have the tracker right here. You can literally see how this strategy has been destroying the market, riding companies with crazy momentum to the upside when they break all-time highs. Those signals are all captured and pointed out here. So try it out and let me know what you think. Stop letting Wall Street take advantage of you. www.marketspredictor.com. It's free for now, but we're ramping up the demand, so we're gonna have to start charging soon, okay? All right, best of luck out there. I hope this helped. See you later. Bye now.